Hi, everyone. Good afternoon. Hope everyone is well. Thank you for joining the Marqeta live stream. So hello and welcome to the API Chronicles, Unlocking the Future, a live celebration of APIs hosted by Marqeta. My name's Jack Parfitt. I work in the enterprise go-to-market team here at Marqeta, covering the UK and Europe. Today, I'll be your moderator, but I am joined by a panel of experts, which we'll be hearing more from in a minute. But let's be honest, when you've been through a stressful event, be that a car accident, a travel nightmare, or a breakdown, the last thing you want is to wait for the money you're due. Delays add friction, frustration, and can damage trust. So, how do you turn that moment of stress into a moment of relief? Today, we're deep diving into the power of instant card-based disbursements. We'll explore how sending money directly via the card rails can cut waiting times, dramatically increase customer satisfaction, and to help streamline your entire back-end operation. So stick with us for the next hour or so and learn how to get your customers their funds when they need them most. As we have the benefit of running this live, we'd love some audience participation. So feel free to drop your comments and thoughts and questions into the comment section during the stream. And I'll do my best to get to them, and we will try and answer them where and when we can. As I said, it's not just me today, and you can see that from the screen. I'm joined by a panel of industry experts. So I'll hand over to the team to introduce themselves. Be great to hear more a little about you, your current role, and your experience to date. And Rory, I will start with you.
Thank you. Thanks, Jack. And thank you to everyone for making this possible. I'm Rory Yates. I'm the outgoing Chief Strategy Officer of EIS. EIS is a core technology platform in the insurance industry. So 40 plus insurers, full transformation. I have a love-hate relationship with insurance because I've come in and out of this industry a number of times through either working capital investors and turning around insurers or running my own businesses in the insurance industry. But I keep coming back because I love this industry. Nothing can move without it. We're fundamental to humanity and society. And today I'll be taking a broad view of this topic. And as a strategist, I think I'll be injecting less specialist commentary and more broad market perspective on why this topic is important.
Fantastic. Thanks, Rory. Michael.
Yeah, hi everybody. My name is Michael Sharp. I work for a company called Duck Creek Technologies. We are a global provider of insurance software solutions, and I work in the payment solution space and have done so for quite a few years. Before Duck Creek, I was part of a insurance middleware in the payment space called Inverse, and so I have a fair degree of understanding of insurance and how it impacts payments and where we can really try and get payments to work a little bit better for our clients.
Fantastic. Thanks, Michael. And last but not least, Emma.
Hello, everybody. Emma Mills from MasterCard. I'm delighted to join Rory and Michael this afternoon. I'm sitting in MasterCard's global partnerships function, and I'm responsible for emerging segments. And we're currently, or have been for the last couple of years, focused on the insurance industry, where card actually represents a very small proportion of payments in insurance, both from a collections point of view, where insurers are collecting premium, but also the topic we're talking today about in terms of dispersing insurance claims via the card networks. So this is really a very interesting segment for us because it's currently very underrepresented from cards, but of course, high value payment flows coming in and out of the industry. My entire career has been in the payments industry. It moves quite quickly, a little bit dissimilar to the insurance industry, but we see both of them being critical national infrastructure. So lots of parallels between the insurance world and the payments world. And certainly over the last 2 years, while we've been focused on this industry, we are seeing a massive convergence of payments and insurance companies coming together to really address this digital transformation and the need to serve insurers, policyholders, network providers much better than they are today.
Fantastic. Thank you, Emma. So we've got a number of topics to cover today, and I think we're going to have a really good discussion. One of the things I'd love to start with, and it just helps set the scene. what do you guys see is driving the urgency for insurers to modernize their payout processes now? And what do you see as the biggest pain points? Rory, I'd love to start with you as that kind of broad strategic view that you said about. I think that would really help set the scene.
I think straight away I would say that this topic is rising up the strategic agenda because, as Emma's already highlighted, it's a very high value use case. I think people often have missed that in the past. This is in the context of claim settlement, for example, create massively better experiences and reduce operational risk and cost simultaneously. Have your cake and eat it kind of moments. And I think I think that there's a growing concern around consumer duty, being fairer to customers, giving them optionalities become really, really important, giving them choice, improving that. And actually, alongside some of the sort of segments that you highlighted in the opening piece, we think of car, we think of high claims rate product. But actually, if you were to go to some of the less talked about use cases, like healthcare, where healthcare, life and annuities is backing into different kinds of healthcare provision, and actually being able to issue a car payment and give that person maybe perhaps choice, or telemedicine is another good example where we're seeing a different approach to disbursements, where you might be in another country and you need immediate aid. All of these things, use cases become quite rich. So I think we're seeing this topic kind of float up into the priority one. And actually, as a strategist, I've often sat in workshops and had to call it out as low risk, high value, right? So you can work with a MasterCard, and you can work with someone like Emma who knows the space as well, and deliver some of this stuff very, very quickly. I think the only other final point I would make is that we do have trust issues. I often heard quoting this, whilst I said insurance is this wonderful industry, it's also the least trusted industry in the world. Even real estate ranks higher. Even in 2008, when the banks crashed the world, insurance still ranks lower trust than banks. It's an untrusted issue that this actually does help with, because it says, look, I'm going to get you a payment immediately. That's what the product is for. It's when we're in our worst moments, it comes and helps us out. And having this kind of disbursement option really delivers on that promise and can build trust. So that's my kind of opening market perspective.
Nice. No, I think that's really insightful, Rory. And I think that when I speak to lots of insurers, one of the things they talk about is trust and rising customer expectations around the customers now expect more from them. So interesting to hear kind of that side of it. Michael, I'll come to you. It'd be great from a Duck Creek and your perspective.
Yeah, brilliant. Thank you very much. I don't want to repeat too much of what is said. So I think there's really a confluence of factors that are driving insurers to look at payments differently, and whether that's to collect premium or to pay out claims. I think you touched on it now. It's the first one is really about the expectation that the customer has. And a customer's expectation for insurance doesn't come from dealing with insurance, it comes from dealing with everyday life. So whether that's retail or banking, they have an expectation that if they can use a peer-to-peer app and get money instantly, and that takes sort of a minute or two, why can't they do that when dealing with an insurer? One of the other big issues we're seeing is really one around operational efficiencies. We know that when we deal with legacy systems, we are really too far away from the core system, and that causes a whole range of issues around reconciliation and disjointed systems and outdated methods, etc. Another reason we're finding that it is becoming far more topical is one around cost. Old systems cost money. They cost a lot of money to maintain, they cost a lot of money to fix. And normally those costs are sunk into the people that we need to work on them, because nothing is automated and everything has sort of manual interventions. And at the same time, while we're spending a lot of money trying to manage old systems, we have in insurance especially, we have an aging workforce that as and when they leave the industry, they take with them a huge amount of knowledge. And no matter how much we try and document these processes, when they leave, there is a brain drain and there is a lot of information that's gone. And really the last point I would make, and I think there are more, but the last point I would make is that for many insurers currently, that they operate in a low growth, low interest rate environment, specifically one where replacement costs are high and where insurance from climate disasters are increasing. And so for them, managing margin and managing cost is extremely important. And so when you can improve your payout functionality, you can really improve your liquidity forecasting. You can improve your working capital, because you can ensure that less cash is sitting idly in some system that you don't have a view of, but rather make sure that that money is being used and being productive in generating revenue.
Yeah, perfect, Michael. I think that's probably stuff we've all seen across those different conversations we have. Emma, are you back with us? You went off camera for a minute, but are you okay?
Feedback.
Yeah, we can't hear you, Emma.
Right. Okay. Could you give me a moment and I'll rejoin you in a moment?
We'll carry on. You get sorted.
Yeah, Jack, I've got a follow up to Michael's points. I think they were great. I think that this does play to what Michael's talking about, which is a broader kind of shift in that, competing on choice, speed, and customer-led outcomes is taking place, because frankly, in most consumer markets, price-led is not going to work. It's going to run out of road, right? We can't just premiumize our way out of a problem. And I really love the other point about the way that it gives you a view on liquidity and capital in a different way as well. And that money sitting idly, is also very important in insurance. And lastly, I also agree with the repair network point. That the reality is that replace or repair is also getting increasingly complex. And actually, for customers to navigate some of that, we can do a lot in ecosystems now. And actually, some of this disbursement technology to digital disbursements. And Michael and Emma, when she gets back on, will better talk to that. But the reality is, putting customers back in the choice seat, we can also provide perhaps a view of repair and replace options, rather than getting into the way of how those payments are perhaps transacted. Those are done with the customer in mind. They can be done digitally. They can be dropped on cards. Payments can be made in different ways. And I think that it is more, that's why I said earlier that it is more of a competitive priority than you would first think, right? You just think it's a bit of payment optionality. So yeah, I just wanted to sort of, almost back up each of those views. I think they are important market perspectives.
No, and I think that they're all key. And one of the things that, as you both were talking through those scenarios, right, I think historically, when we think of payments, we automatically think of this must be driven by the finance department or the CFO within that business. But there's a broad range of problems they're trying to solve, right? From customer satisfaction to trust, operational efficiencies, not just financial efficiencies. So from the conversations that you both have, do you see that it is, the head of customer support who's driving those conversations, opposed to those traditional finance people?
I'll go first, and people can chime in. I think one thing I've noticed in insurance, it's very difficult to find a single owner for payments, and I think that often leads to some of the frustration within getting a better payment infrastructure into a carrier, because it touches the billing team, it touches the claims team, it'll touch treasury, it'll touch finance, it touches ops. And because it touches so many different departments, it is extremely important. We've seen it live in places like digital transformation, where carriers are saying we need to improve the way in which we operate and the way in which we engage with our clients. We've seen it in traditional ops business. We've seen it in the finance team. It can live in a myriad of places, and therefore also take on a myriad of conversations, because different people find different things more interesting.
100%, completely agree. Emma, hopefully you're back with us.
I've changed devices. Let's see if this works. Thank you for your patience.
Can hear you loud and clear.
Great.
So I'd love to hear your thoughts on the topic. Would you like me to repeat the topic, or?
Are we still talking about what are the biggest pain points? Or did you move on?
We're talking about what's driving urgency for insurers to modernize their payout processes.
Now, at the risk of repeating anything that's been said whilst I was switching devices, I think one of the biggest pressures on insurers and on the market in general is really competitive pressure. There's a lot of attrition in personal lines insurance. It takes several years to have a profitable policy with a consumer. And those moments of truth, whether it be paying for a policy or receiving a claim, they're really pivotal in how consumers feel about engaging with a particular brand. And insurance companies aren't really competing with other insurance companies anymore. They're competing in a world where everybody is used to a singular click button with a transaction where everything happens and you only notice it if it goes wrong. Whereas in the world of insurance, really, we're still not seeing a lot of things like tokenized card on file for paying for a policy. We're still seeing a lot of pan key entry. That's just friction that is no longer really required in the journey, but we're seeing a lot of advancement of insurance in that side of things, where they're looking to make the onboarding of a policyholder super slick, and taking up things like Apple Pay and Google Pay and MasterCard's Click to Pay to make the inbound really slick. But I think they're also now starting to engage with us on how do we make the payouts experience as slick as well, so that in the event that that moment of truth occurs, that the policyholder is getting an experience that they're really familiar with, but that's really slick as well.
No, perfect. And that kind of leads me on, I think, to the next topic I wanted to cover. It does it perfectly, Emma. So thank you very much. So a big thing on customer loyalty. What do you guys see happens with customer loyalty when, you know, payouts are taking days, if not weeks? Do customers particularly then switch providers? Do they lose them at a renewal period? What do you see as the biggest driver of kind of poor customer loyalty in the payment space within insurance?
I can go first.
Please do.
I mean, for loyalty is a tricky one in insurance, right? So it does vary wildly what drives loyalty depending on the product. I think, you know, we've tended to refer back to cars on this one, but as I say, with something like healthcare, it would be very different. I think the reality is that customer satisfaction, you know, I mentioned the trust point earlier, but customer satisfaction can be closely correlated in insurance to choice, control, and general communications. And Emma's just highlighted, you know, a bunch of choice and control options that new payment methods are providing, right? So they do play in, and it always fascinates me that the human brain can detect a delay in 4 nanoseconds. So when we think about how frustration builds in claims, it builds almost instantaneously, and all the process is seen as thereafter is letting them down. So there are data points that you can see in analyst reports and stuff like that suggest that the more effective and efficient the claim is to actually pay out or disbursement, that it does correlate to loyalty. So there is an immediate effect on that. So you can business case that. So if insurers are listening, you know, there are some good data points that reach out to Gartner or whoever. They've all got reports on some of this correlation. But I think more importantly, if we are to move to a more trusted era and think about things like risk mitigation, embedded insurance, these topics are related to this, because you start to think, well, I need a more adaptive payment capability. I'm not just paying out after the fact on a sort of big claim basis, or there are cases now of products that like Ford Pro, you know, have moved into the insurance space, and connected cars are a good example, where they're saying actually we will have more, the product and service is about risk mitigation. So if the tires need replacing, we're actually going to get those sorted at a discount. You've got all this optionality coming in around payments and disbursements that are going to fundamentally change the industry. So yes, it absolutely has an effect on loyalty. It has an effect on loyalty in a number of areas. I think the other one that gets missed is that people do see better payment options as secure, and conversely as helping to facilitate reduce fraud. Now there's a mixed bag on how much it can do that, and I'm not an expert in that. I'm the strategist in the room, so the other guys can pick up some of those points. But I have also seen in market research reports that some of these other topics come up. So I want that security, I want that choice. I feel safe with this payment option. Why aren't I being provided it? And insurance can be a point of reverse frustration, right? So I'll stop there.
Emma,
oh, sorry. I was just going to lead on from what Rory said at the very beginning around, you know, lack of trust in insurance and how it stacks up against secondhand car salespeople, banking, and various other things. You know, that it unfortunately has a bit of a bad rep. But if you actually go in and look at the ICO's data on the complaint levels about insurance, and what the nature of those complaints are, and actually the upheld rates, If you pop that into ChatGPT or Copilot, it'll give you some very interesting views. So claims, not surprisingly, that claims does have a relatively high rate of complaint, because people only really complain when something happens, right? So, if you have an insurance policy and you don't make a claim, no need to raise that with anybody. So it's always on that event where something happens that you're likely to even complain. But I think that what's really interesting about that is the upheld rate. It's very high. And because insurers are selling trust and they're selling that peace of mind that when you need us, we will be there. It's not just a cost of losing a customer, it's the cost of not gaining one. That if you have a reputational issue, that you don't fulfill claims in a satisfactory manner, and that makes it onto the Martin Lewis show or the BBC TV, culture shows. It's also opportunity cost. It's not just a direct loss, there's an opportunity cost as well.
Michael.
I would to add to that. I think when you boil insurance down to its core, it is nothing more than a promise to pay. I mean, that is what the insurance industry does. We promise to pay, and normally that promise to pay is kicked off by some or other distressful moment for a client, and that the quantum of that distress might vary, but there's normally something that's happened. Maybe your toddler's pulled the TV off the stand, or you've been in a motor vehicle accident, but there's something that happens. And we need to always remember that for any client, ourselves included, the claims process is one process. It's not FNOL, it's not investigation, it's not settlement, it is one process. And so anything that happens within that process that takes time is going to eradicate trust. And so I always use the example of if you think about football, or if anyone's listening from America's soccer, imagine you pick the ball up really deep in your own half, and then through this amazing skill and strength, you dribble through 9 players, get to the goal, and then blast it 6 meters over. It's all for nothing. And that's kind of what happens with claims payments. You can have a really good claims process from FNL all the way through, but if at the last hurdle you go and send a check to someone who doesn't need a check, or is sitting at an airport waiting to be reimbursed, it all falls apart. And as long as we as insurance technologists and those that work in the insurance space remember, our role is that as soon as that claim comes to life, we must make sure that we replace the good service or give the money. That's when our claims process ends, at no point before that.
Jack, I just want to carry on from that point, actually, because I've sat in about 300 depth interviews watching claims processes with people, hundreds of focus groups where people have talked me through their claims experiences. And I also, Emma raised the really good point about the data. I mean, that is there is a trend, which I think maybe ChatGPT revealed to you, Emma, I don't know, but we are seeing things being upheld more often now that aren't just when it goes against the claimant, right? So it is about, and there are a lot more in there about how expectations aren't being met. And there is a lot more being upheld where it's quite reasonable that the insurer should be providing these things for the customer. And actually, why aren't they? So I think insurers have got a massive opportunity to improve this space using these new digital disbursement capabilities. But equally there is a bit of an emerging threat and pressure that if they don't, they will see even more of these claims, allied to all the points being made about how we can eradicate trust really, really quickly. It's tough to earn, right? Easy to lose. And I think that expectation piece will rise dramatically. So, I mean, I've not got direct data on this. I'm going to speak as a strategist. I could see this massively shifting against the insurer's payment optionality. Could be a big part of that, for sure.
We've had a great question there from Rob. Sorry, Emma, I cut you off. Please go on.
No, go to Rob. We'll come back to if it's still relevant.
Cool. Great question there from Rob. Rob, thank you. So with an increase in spend of payment, how does it affect due diligence processes put in place to mitigate fraud? Got your hand up there, Rory, gone.
Yeah, just because, and I bet, again, the other guys will, but I've had to have a hard look at this topic recently, and I didn't that long ago buy a fraud detection business, actually. So I've got some insight into it, or was part of buying one. I think the two things: one, digital disbursements and that visibility we talked about earlier can actually help and aid fraud detection processes. I do think it's a really good question. I think it does rely, I think Michael made the point earlier about legacy technologies. There is a need to perhaps wrap some of this in wider ecosystem changes so that you do have stronger detection capabilities. You've got more potential oversight and data flowing. So actually you could argue that with the right fraud detection capabilities and processes, you might find you're even more due diligent about detecting fraud and acting on it. But there is that risk, and it should be logged on the risk radar, and you make clear choices about when digital disbursements and payment optionalities are provided to customers. It's not just one size fits all. I looked at some of the MasterCard stuff in the run up to this, and they certainly are advocating for high adaptivity and choice. And I think that's for the insurer as much as for the customer, right?
Yeah, I think that's a great point. See it a lot over the years that payment innovation, kind of due diligence innovation, or KYC, or know your customer innovation seem to go hand in hand. So yeah, a really good question, Rob.
It can go hand in hand, but you're right.
You hope it goes hand in hand.
Yeah.
I mean, and just to build on Rory's answer there, I think, Rob, it's a great question. In some of the use cases that we're seeing in insurance disbursement, there's actually a great deal more control over fraud and risk, because the insurer is dispersing a commercial payment to the provider of the service. So let's take Rory's example of, the health and situation. I had this myself. My son broke his arm on day one of the world's most expensive ski trip. So was super, super popular. But when I got to the bottom of the mountain, I had to pay out all of the sums myself and then claim them back from the insurance company later. And I can tell you for free that I think it cost the insurance company an awful lot more to process that claim than it actually cost them to give me the money. So the use case that we see very popular is where the insurance company would have provided me with, Jack, this is your next question. So I'm providing you with all the lead-ins to your next questions today, is where the insurance company provides the virtual card for the policyholder, but it is the insurance company's funds that they are transacting with the healthcare provider. So in that scenario, I would have tapped my virtual card at the doctor's office, at which point the transaction is authorised for me as a policyholder with winter sports cover in a doctor's office in the French Alps. So all looks valid, looks good. I transact that singular transaction to the doctor's office. It's authorised, and the funds move between the insurance company and the doctor's office. And I hope it's not too much of a sales pitch, but that's the beauty of the card payment networks as well, where you can transact with a business where the due diligence is already been performed on that business by whoever's processing the card transactions for them, to the standards that the main card brands actually set. So it actually provides more security rather than less. And of course, the insurance company have the added value of, they know they are only paying for a valid transaction to a valid amount. They can then stop the card once the claim has been fully paid.
And to add on to that, and not to disagree at all, because I think it's all very valid, I think that the answer here is that it can be a better process. It depends on the technology and the ecosystem that you wrap around it. If you're still sitting with very old tech, it can become very difficult. But if you're sitting with modern technology and modern partners, doing a KYC check where we can find the identity of the beneficiary or the claimant immediately, run that against a sanction list globally, impede it from going to certain geographies or jurisdictions that we might not favor. That can all happen in near real time. And even if you have a high volume of claims or claim search going through your process, if you've modeled for it and built for it, it can work. Where it falls over is when you're trying to still retrofit a high volume of data or high volume of claims through a very thin pipe.
No, all good points. And Emma, I hope your son is okay, and I hope you forgave him.
It was a long time ago, and I'm almost over it.
Fantastic. Going to say, yeah, almost, I think, being the operative word there. So that leads us on quite nicely to what role do you see that card-based infrastructure can now play in enabling real-time payouts at scale? Michael, let's start with you.
Yeah, perfect. I think I would start with saying that card as a rail probably works really for three reasons. I think one, it's global. I mean, whether you are working in the UK or going over to business in the US or holidaying in Australia or Europe, you can use that card. We're all familiar with how it works. And because we are familiar and because it's global, it's also very accessible. Everybody knows how it works. We don't need to preload an app or do something that is outside of our norm. And because of that, there's very little friction in using card for disbursement. we all carry them around or have them linked to our wallets. And because there's no friction, we can start scaling that at an insurance level quite quickly.
Rory.
I mean, this one goes into the more specialist category for sure, but so I won't comment on the payments, and I'm going to go back to customers as well to follow on with Michael's point about choice, right? Because we Gen Z and Alphas are coming online, and again they expect a lot of this optionality. So there's the example being that they are going to be more transient than any generation before. We are moving to a more urbanized, more geographically, despite all the political movement that we're seeing, the trend is going to still be towards massive movement, and travel is still scaling at rapid rates. So you need these kind of infrastructures and global connectivity around payments to make the proposition possible. There's a lot of where insurers are struggling right now because the insurance is here, but the claim is over there, or the experience is actually, Emma's use case was fantastic earlier, right? Because it wraps in so much of this stuff into one experience. Sort of that's true, right? That in that situation, she does have an expectation, quite rightly, that this is available to me, and you're going to make this a lot harder for yourself as well as for me by not using this card payment infrastructure. I say the scale point. That's for the payment specialists on this call. I understand it's it has lots of other scale benefits in technology and processing and all that good stuff as well.
Just to speak to the scale point as well. So when you think about traditional insurance and claims disbursements, if the claim is out of pocket, that's one thing. But even when you think about claims where it's an in-network provider, those networks that insurers spend a great deal of time and money curating so that their policyholders can go to an approved provider to those services. Even at scale within an insurance company, you're probably talking tens of thousands of providers within those networks, and at quite considerable expense to put them into that category. There are 150 million merchants around the globe that can accept a payment card, and that only provides the security that both the sender of the payment and the receiver of the payment are bound by the rules that the payment networks enable and that have gone through the necessary due diligence. But it also provides, and I think both Rory and Michael have mentioned this, choice. So what's the one thing people want? Even if they're all going to do the thing that you want them to do anyway, they want it to have been self-directed choice, and that drives a lot of customer satisfaction. It's hard to compete with that scaled network that is growing, very, very rapidly year on year. So that's one of the things I would say about scale. And we all probably have multiple cards in our wallets, the physical wallets and the digital wallets. And as Rory mentioned, everybody knows how to use them. So that's quite a difficult model to replicate.
Jack, I just want to follow up on that immediately as well. I'm becoming the follow-up guy on the call. I think that's really important because there's a reverse scale issue here where you think about how insurers create, vastly more complex ecosystems in order to control the repair network and make payments in the traditional way. They don't have that scale issue if they are simply leaning into the card, the scalable card infrastructure that already sits there and the payment infrastructure that already sits there. So there's also something for insurers to consider, is that this reverse infrastructure that you're creating, we know, for example, Michael mentioned the aging insurer employee, big problem. But also, if you take repair networks in most Western markets, they're rapidly aging. Garage owners are in the UK over 55 on average. They don't adopt new technologies very easily, but the one thing they do have is a card reader and payment system. You're not going to get an API integration necessarily into a lot of these repair guys, and you're therefore not going to perhaps offer them as a repair choice to customers when they are the most local, most available, most appropriate fit. So you've got this reverse scale issue, I think, as a more of a strategist in this conversation, that I would also urge people to look at, right?
No,
and again, another personal use case here is periodically you have to get, I hate to say this, but you have to get the alloys on your car repaired because you scuffed them 100 times, right? And so the gentleman who, has done several repairs on my car, He doesn't do insurance work anymore. I mean, he's very, very good, but he doesn't do insurance work anymore because it takes too long for him to receive payment. And so, of course, he'll take a card payment from me. He say, oh, you know, if you've got insurance, feel free to claim on it yourself, but you'll have to do that. I'm only going to accept a card payment because that's the only way I know I'm going to get paid today. And so when we think about card payments being of value, they're not only of value to the policyholder, they're also of value to the network provider because they're getting paid sooner. And to Rory's point, they don't have to API into a different system to do it. It's infrastructure that they're already familiar with and that they're already able to process as part of their day-to-day transactions work. So we think that insurance is that sweet spot for us where we're adding value to the insurer, to the policyholder, but also to the supplier who typically gets paid the least and last in the process. So there's value all round.
Some fantastic points, Rory. You know more about payments than you think you do, which is very useful. I'm going to touch on something that Michael said for the next point. So talked about kind of issuing a card without someone having to download an app and being as frictionless as possible. So one of the things we talk about in the ebook that associates with this live stream is web push provisioning. How do you guys think that web push provisioning eliminates friction, and why is it such a game changer for disbursements? And I'll start with you, Emma.
I think this is key because, you know, if you scroll through your phone, you're going through pages and pages, aren't you? Even if you've got them grouped into groups of apps to find the exact app that you need to be able to do something. So if you've got an insurance policy app on your phone and you have to go into that to be able to make a claim and to be able to access the payment component, it's several clicks before you get to what you're looking for. Whereas with web push provisioning, you can receive that card through an email or through a WhatsApp or a text message. It can then be provisioned to your digital wallet just through a web browser. So everybody's got Chrome or a browser that they have access to on their phone. So there's no need to scroll. Once clicked on it, it will take you to the browser, and then you can actually then download the card to your wallet. So very, very simple process without the need of a third-party app to enable you to accept that payment.
Yeah, and then working alongside MasterCard, you know, Marqeta, it's one of our kind of core products around providing that. And we have, and myself personally, have lots of conversations with insurers who really like the idea of web push provisioning. And the biggest pain point we always hear is it's about keeping the customer happy. So whether it be a delayed flight, issue them a refund, or just issue them some money to go and get some lunch. Or if you're stuck by the roadside, you know, send them the car to go and get a taxi. It goes a long way. It reduces complaints, a lot of them say, and improves that customer satisfaction. Rory, is that something that you've seen from your discussions?
Yeah, I've had it described to me in a recent, and actually you made this point earlier, who's tending to own the subject. Increasingly for me, it's been the COO. So it's been in operations. Michael mentioned operations is one of the areas where it crosses over, but I think they're increasingly owning it. And in that review, as I can't mention who it is, but there was definitely examples of where actually this they had been experimenting with this. It's quite a digital insurer, and that actually it created moments of customer delight. So actually, I think Emma mentioned, I think that one of the quotes was it felt to the customer like getting a ticket, and adding that to their wallet. It didn't feel like a card at all, and that sort of stuff creates real moments of delight. And let's be honest, we've talked about this. That's hard to achieve in insurance. Moments of delight, when you've gone through a process that asks you what's the material of your roof tiles when you buy it, and then has tried to basically not pay out your claim. I think these things can actually really turn this around, right? So you might have had actually quite a frictionful claim, but suddenly you're given this option to settle this really, really quickly. And as you say, sometimes in really key moments of distress. So there was definitely examples where, I haven't seen any operating this at significant scale. Michael may have a better view of this, but I definitely saw it being used in key moments of distress as a really valuable customer tool. Yeah.
And just to add to that, I think not only is it of value to the consumer when they receive it, the policyholder, it's not easy to get into the tech stack to add another component to the web, to the insurer's app, right? There is, competing priorities. There's a lot of governance and control over those apps as well. And so the idea of doing that straight out of the gate to test whether or not the value proposition works is not that appealing to an insurance company. Being able to, and at some point they might want to embed this as part of the app journey to drive more traffic into the app, and that's perfectly fine. But they wouldn't necessarily want to do that for a pilot or for a proof of value. And I think that's one of the really super things about web push provisioning, that it allows somebody to test the value proposition, create those moments of delight and joy and those proof points without having to go through a 2-year IT project. They can go on to a roadmap that allows them to do that over a period of time.
And there's also a piece with that, right, around, the insurance companies aren't payment companies. So, tokenization, digital cards can sound quite daunting. One of the things that if you're going to build the in-app provisioning, you have to get your app certified by Apple or Google Pay. Web push provisioning eliminates that need. So you don't have to have that in-house knowledge. And as you said, Emma, that time and an investment to build something. Michael, would love to hear from you.
Well, the only thing I would add really is this technology allows sort of two things that I think are really important in the insurance software space. One is speed to market. You can do this really quickly, and Emma touched on that. We don't have to go through a lot of build and a lot of rounds with the tech team to get this out to market. And two, it improves choice astronomically for clients. If we think about parametric insurance, if we think about a client who wakes up in the morning and their house is flooded or they need to evacuate, you don't know what they're going to have, where they're going to be, or how they are going to want to receive that claim. And this does really help in putting money where it matters the most for a client when they're in that situation.
Yeah, fantastic. Again, we're doing quite well here. We've really teed ourselves up for the next topic. So again, as industry experts and people that are in the day-to-day insurance and payment world, what are some of the innovation? I can't even put my teeth back in. I'm gonna skip this one because I can't say it. So what innovation and use cases are you seeing emerge out of digital payments and payouts across the insurance world, from whether it be roadside assistance or emergency funds? There you go. Managed to get my words out, but please, Michael, let's start with you.
Great. I mean, Emma already touched on a few of them. So one is emergency support. So being able to, in the moment of claim, being able to push funds really quickly to support a policyholder. I think the one that leans quite heavily into that is what I would sort of term a proactive payout. So if Emma's in a situation like with her son and puts in a claim, we know as an insurer that there are certain costs that are going to have to be borne throughout that process. And we can start moving money quite quickly to cover some of those costs, be it hotel accommodation if you've lost your house, be it money for transport, be it whatever it is. You can start moving those funds quite quickly without having to wait for the entire claims process to go through, because some of those things are covered through the policy. I think those are sort of two. The other one, which Emma spoke about as well, is around provider to provider payments. And I think a really good example, again, when you're trying to fix your car or you're trying to fix broken glass in your home, you can use card payments to accelerate those provider to provider payments quite quickly. And the last one that I would probably touch on is really around sort of micro insurance and parametric based insurance. For a long time, there have been insurance products that have been really good and really clever. We think about travel insurance or gig worker economy insurance. They all make a lot of sense, but if the payout mechanism isn't quick and isn't feasible and inexpensive, the product itself doesn't work. And being able to push disbursements via card helps us to use those type of insurance products more freely.
I would echo the point about the parametric piece, because insurers have spent a lot of time and money in creating those digital triggers to be able to process the claim. And then they kind of get let down a little bit where they've been able to identify a claim, proactively reach out to the policyholder saying, great news, we know that you've had this event, we're going to process a claim to you, and then the actual payment takes 4 or 5 days thereafter. So when you put those two things together, you really have magic. The other area that we see quite a lot of this use case in is for pet. Nobody loves anything more than they love their dog. I'm prepared to challenge everybody on this. But when you have that, oh my goodness, I think my dog's choking, but it's really just a twig stuck in their back of the teeth, and you're taking them to the vets, that ability to make that payment there and then and access your insurance is really important. So very, very emotive subject, but pet's one of those areas, and we see some really innovative uses of that where that engagement, because the payment is happening on the app, is driving app traffic, and then they're using that to upsell other solutions for to the policyholder for their pet. So I think pet's another great one. Time sensitive, emotive. I just need to be able to make the payment now. Oh, I think there was some interesting articles as well about pet owners being able to cover the cost of vet bills whilst they're waiting for their insurance to come through, and there being some hesitation about providing care to their loved one because they can't necessarily cover the full amount themselves at the time.
Rory.
So, I mean, I've been involved in some pet insurance strategy work recently, actually, Emma, and yeah, I had to tell an insurer that it is true when you actually use anthropological research that people love their pets often more than their children, which is quite remarkable. But they don't mean it in that way. And then when they're asked which one would they prioritize, they say maybe the children. So the pets are right up there. But as someone with pets and children, yeah, I won't comment. But I think that is a really good use case of the idea that you're in high distress, and the parametric examples given. Those are, again, they're opportunities also to create real customer delight. And I think the one about the vet network is also true for a lot of other ecosystem-based insurance products that rely on other medical services and all sorts of stuff. Where that happens, you are dealing with sometimes quite high cost, right? So in emergency care in Europe, you can experience a huge amount of cost. I mean, you might have done that with your boy, but and therefore having relief or early on getting those payments becomes absolutely vital. It's not just a nice to have. It's to say, I'm loading up a credit card, having just spent a fortune on a skiing holiday, and again, I feel that pain immensely myself. Those are great examples. I think for me, the things I'm seeing, because I think your question was more about the sort of stretch and the next horizon. So if I look at the strategic horizon that I'm seeing, I think this is good news, and Emma and Michael probably are seeing some of this as well, which is that we move beyond just claims, and that we think about embedding insurance into people's lives and things, and having these car payment options and other virtual methods is starting to get into the conversation around what does it look like when we do connected based insurance, smart insurance. Do these things start to become part of that picture? And the answer is they absolutely do. I've seen stuff where we're looking at price disparities and disbursements based on that. I've seen examples of looking at renewal, even around loyalty examples, where you can't discount the product, you can't change the price, but you can maybe find other ways of reimbursing customers for perhaps experiences that they might have had. Mis-selling correction has come up recently, which is an interesting one. So there's marginal mis-selling. Gap insurance was a good example that was given to me, where there's been a lot of challenge around that product, where actually something like a disbursement could be made quickly and make provisioning out payments at scale really, really much more straightforward. Policy acquisition. So I think you mentioned your open piece that there has been conversations about how we do offer options around actually acquiring your policy. Broker reimbursements in very small niche use cases. So I'm giving you the full stretch here. So lower likelihood of happening, but actually, if you think about it, sometimes it's not worth having a massive broker ecosystem again around certain products. Parametric might be a good example. So you might want to reimburse the broker and say, well, actually, I'm going to treat you more like a consumer here. Your reimbursement, can I provision a card payment or another option? So yeah, I can give you that kind of strategic stretch. Those are some of the more exciting, different ones I've seen.
Fantastic. In the interest of time, I'm going to ask another question, but ask for maybe a couple of sentences from each person. So you kind of touched on it there, Rory, around that data and what you can do with it. But how do you guys feel that real-time payout data can unlock new opportunities for personalization and process improvement? Things like visibility, insights, and adaptability in claim servicing. Michael, I'd love to start with you.
Yeah, perfect. I would say there's quite a few, but if we start with personalization opportunities, they would center for me around two items. One would be around the personalization of communication. Because everything happens real time and is traceable, we know where a process is from FNOL throughout the claims journey, including to when we get to payments, which means we are able to communicate clearly with our clients that this is where they are, this is where their money is, and this is when we expect that they will be able to get that money. So for me, that would be number one. That would be a really great use case to get through. The second one would be, as we are able to absorb more data and understand payout profiles and claim amounts and then reimbursement usage, we can start developing products that potentially speak to a new cohort of individuals. If we see that the same item is being lost over and over again or replaced over and over again, how it is then reimbursed and where individuals go to try and buy that product again, you can come up with new insurance products to cater to those needs. I suppose the second area would really be more around process improvement and optimizing sort of current processes. And number one, I think that if you are able to improve the total speed of any claim, you're winning. So that would be sort of key. And the other thing is that to the question that came through earlier, you're able to do fraud detection real time. And then I would also argue, and sorry, I'm kind of waffling off a few, but we can kind of pick up on any of those.
Carry on.
But I would say that another one would be that as you're able to consume data more real time, you can feed that data into whichever machine learning module that you're employing. And by doing so, potentially improve your underwriting experience because you're dealing with real-time data, not past assumptions. So I would say that those are probably the areas where I would see that real-time data, especially within the card usage, could be used.
I'm going to take a slightly different tact on this one. And I mentioned this earlier when we talked about if it's the insurer's funds on the card when the card is transacted, if there is any excess value on that card, the insurer can effectively claim that back into their own accounts at a certain point. So if there are any insurers who are rounding to ensure that they are fully funding a claim, a small amount on the number of claims that are made being able to be recaptured back into the business once the claim has been paid can be quite significant. I think there's another thing, and again, I will give this a personal twist. When you go to see the dermatologist and they look at the policy, the healthcare policy you have, they say, oh, this is a good policy. And they're in their own minds, they know what the policy limits are, don't they? And I'm not saying that my dermatologist did do this, but he was like, oh, this is a very good policy. And I could see his pen move a little bit more while he was writing down the amount of the claim. And I think that's one of the kind of hidden advantages of using a card where the payment is being made directly. There is no disclosure of the limit that is available on the policy. So we could talk about insurance inflation as in the cost of insurance going up, but one of the important things to insurers is to manage the value of claims so that they're meeting the actual cost of claims, but they're not paying an inflated amount, because an inflated amount paid to the dermatologist or insert other name of any other provider then actually increases the cost of insurance for us all. And so I think that there are two value adds for insurance companies when you think about paying a claim on a payment card. There's no disclosure of the type of policy that you have. There's no idea of what the limit might be to the provider when they're estimating the costs. But also if you are providing some buffer on those claims, that can then come back into the business as well.
Great point, Emma. And we're getting a real insight into your personal life here, which is fantastic. Rory, would love to get your thoughts.
I definitely need a dermatologist. I'm nearly 50, Jack. So if that's what you want the feedback on, I think my point again is going to be slightly adjacent to the payment thing. So I recently moderated a roundtable, a closed roundtable on efficiency versus experience, this sort of paradox. And I think this is one of the areas where there's no more trade-off here. Actually, things like digital disbursements are good examples of how we can facilitate payments and payouts and streamline processes at the same time, settlement, reconciliations, all the things that we've talked about. And I think, mentioned at the beginning, right? I think you can boil, what's required in insurance to differentiate it and get it away from premiumizing itself all the time, which is choice, control, and communications. If we improve those dramatically, and actually, there's a Venn here that all three are required to personalize. Michael mentioned earlier, personalization in insurance is not your name at the top of the screen, right? It is giving me the choices that I need, and maybe even recognizing my payment choices and my preferred methods and provisioning those to me. That becomes a really meaningful transaction. And for me, I think anything that takes this to the point where it creates customer delight, I think insurers, I would encourage them to bash it right up the strategic agenda. This is very hard to do in insurance. As I said earlier, you can streamline claims. I think Michael mentioned this point, right, which is that anything that expedites claims and makes it a better outcome. But actually, some of this actually creates customer delight. It really will shift the loyalty dial. We're seeing TNPS scores and some of the work that I've done more recently get into the sort of nines. And that's really interesting because you're getting referral rates off back of claims experience. It's absolutely these things that drive those outcomes, right? So those would be my my remarks.
Fantastic. And we are rapidly running out of time, but I do have one more topic I'd like us to cover. If we can limit it to one sentence each, but feel free to creep over a little bit. What are your individual visions for the future of payouts in disbursements within the insurance industry? We'll start with Emma.
I would say digital claims disbursements are here, and they are ramping very rapidly. So the future is big scale, let's hope.
Michael.
I will immediately apologize for the fact that I won't be able to do this in one sentence. So I will try my best, though. I think we've spoken a little bit about this. Insurance is that quiet enabler of everyday life. It really allows us to do all the great things like buy houses, build homes, start businesses, all these great things. And for me, payments and specifically claims disbursement is probably the most tangible moment of insurance that there is. And so for me, the future of claims disbursement is one where we put the needs of the client in the center of our diagrams and of our processes to make sure that they receive the funds in the manner and speed and place that they require. But at the same time, and I think really importantly, that as technologists, we make sure that we deliver this in a manner that ensures that more sense out of every dollar of premium that we get goes to cover rather than cost. So that would be mine.
Fantastic. Rory.
So I think for me, I would see this as a massive opportunity to dramatically increase the knowledge of a customer and act on it in this context. So this is what the heart of being an ecosystem business is about, no more value chain based insurers that minimize cost and maximize distribution. We have to move to these ecosystem features. And this is a great example of something that we said at the beginning is relatively easy to do. Go work with MasterCard and go speak to a core tech like Michael's business, and you can make some of this stuff happen quickly. Huge experience benefits. I think in terms of the vision, we are being asked in most regulated Western markets to act fairer on customers, and expectations are forming part of that requirement. And so is complaints. So there's a lot of forces acting on this for it to be higher the agenda, and that you're going to compete on adaptivity. I believe strongly that adaptive insurers, it will be the defining competitive characteristic going forward. And lastly, that we do these things because it builds trust, and we don't have it and we need it.
No, I think that's a fantastic kind of summary to end us, Rory. I think that one of the big themes that's come out of the discussion today is trust in it and innovation. There we go. I can say the word. So Michael, Rory, Emma, I really appreciate your time today. It's been fantastic. I could do this for another hour if we could. And I'd also like to thank the audience for your participation and also being here with us. So guys, thank you very much.
Thank you.
Thank you.